I don't understand at all.
I think she's having a hard time.
Yes, I think so too.
Poor human.
Aha! I think we can help her.
Help her? Help her what?
We can help explain the assignment to her.
Wow, that's a good idea.
Huh? Aww. Hey guys, are you hungry?
Hi!
We are here to help you.
What? You guys can't speak?
Yes, we can. That's why we're gonna help you.
Help me what?
She sounds exactly just like you.
Whew. We wanna help you with your assignment.
Can you guys even help me?
Of course we can. Let's jump right in.
Psak 57. Easy peasy lemon squeezy. So, the objective of Psak 57 is to ensure that appropriate recognition criteria and measurement bases are applied to provision, contingent liabilities, and contingent asset, and that sufficient information is disclosed in the notes to the financial statement to enable users to understand their nature, timing, and amount.
Okay, now I understand the objective of Psak 57, and I also understand the definition. Liability is a present obligation as a result of past event and settlement is expected to result in an outflow of resources, while provision is a liability of uncertain timing or amount.
Yeah, that's correct.
But I don't really understand the common type of provision and how to recognize contingent liability and asset.
Wait a minute. Before we go that far, do you know the exception in Psak 57?
I'm not sure.
And do you know how to recognize and measure a provision?
Also no.
So first, we will explain the exception in Psak 57 before we discuss the common type of provision, contingent asset, and contingent liability.
Psak 57 excludes obligation and contingencies that arise from non-onerous executory contracts and items covered by another Psak. For example, construction contracts, income taxes, leases, and employee benefits that have been explained in Psak 34, 46, 30, 24, 28, and 36.
Oh, so contingencies that arises from non-onerous executory contracts is not included as Psak 57.
Yeah, that's true.
Okay, next. A provision is recognized only if a present obligation, legal or constructive, has arisen as a result of a past event or the obligating event. Payment is probable or more likely than not, and the amount can be estimated reliably.
To measure a provision, the management in the company must use judgment based on past or similar transactions, discussion with experts, and any other pertinent information. Measurement of the liability should consider the time value of money if material. Future events that may have an impact on the measurement of the cost should be considered.
Oh, so the amount recognized should be the best estimate of the expenditure required to settle the present obligation, and the best estimate represent the amount that a company would pay to settle the obligation at the statement of financial position date.
Correct!
Okay, good. You really are a fast learner. Now we will discuss about the 6 common types of provision. The first one is litigation provision. Litigation provision happens when a company is involved in a lawsuit, and the company assumes that it is probable that the company will be liable for certain money. In this case, the company can estimate the amount reliably even though the litigation are still in the future.
Okay, I understand it very clear.
Okay, next we will discuss about warranty. So, warranty is a promise made by a seller to a buyer to make good on the deficiency of quantity, quality, or performance in a product. In this case, the customer will make a warranty claim in the future, but the company can reasonably estimate the cost involved, so this can be considered as provision.
So when I buy a phone, it means that the warranty is included in the phone, right?
That's true. For example, when you buy your phone, assurance type warranty is usually included for a year. And you can also buy additional warranty called service type warranty for a certain price.
Okay, you can go on.
So next is consideration payable. Consideration payable is a strategy created by the company by offering premiums, coupon offers, and rebates to stimulate sales to their customers as a part of a revenue arrangement. Oh yeah, do you know Starbucks?
Yes, I know, but I rarely buy there because the prices are not student-friendly.
Ah, what a shame. Next time, you must buy coffee there, even though it's quite pricey, but they compensate by giving a lot of rewards.
Rewards? What does it mean?
For example, if you buy coffee from Starbucks, you will earn stars. And if you collect enough stars, you can convert the stars into free foods or beverage from Starbucks.
Oh, really? So I can get free coffee there? That sounds good! It can accompany me staying up all night, working to finish my endless assignment.
Yes, that's true. From this example, it means that Starbucks should estimate the cost of premiums and coupons to expense in the period of the sale that benefits from the plan. So this can be considered as provision.
Okay, I will explain the next one, which is environmental provision. Environmental provision is when a company has an existing legal obligation associated with the retirement of a long-lived asset. In this case, the company can reasonably estimate the amount of the liability, so this can be included as a provision.
Oh, the example is when an oil company is required to dismantle and remove the platform at the end of its useful life. This can be considered as environmental provision, right?
Yeah, that's right. In this case, the company can estimate the dismantling and removal costs, so this can be included as provision.
Okay, next one is onerous contracts. Onerous contracts happen when the unavoidable cost of meeting the obligation exceed the economic benefits expected to be received.
Wait a minute. Why is it called onerous?
It is called onerous because, for example, when a company has lease and pays yearly rentals for the factory, the company cannot sublet the factory to another party, and the company is bounded by the contract to keep paying until the contract ends unless the company is willing to pay a penalty for a certain amount to cancel the lease, whichever is smaller.
Okay, I understand. So that's why it's called onerous. Now you can continue.
Okay, the last one is restructuring. Restructuring is a program that is planned and controlled by management and materially change either in the scope of business undertaken by the company or the manner in which that business is conducted.
There is certain costs that must be included in restructuring. For example, employee termination costs. because the cost must be issued in the context of restructuring, and the cost that must be excluded in restructuring is the cost that is not related with the old scope. For example, the cost of investment in new system.
Oh, there is some important thing in provision. A company must provide a reconciliation of its beginning to ending balance for each major class of provision, identifying what caused the change during the period.
Wow! Now I quite understand about 6 common types of provision.
That's good. Next, in Psak 57, there is something that called contingent liabilities. Contingent liabilities are not recognized in the financial statement because they are possible obligation or not yet confirmed, a present obligation for which it is not probable that payment will be made, or a present obligation for which a reliable estimate of the obligation cannot be made.
This illustration presents the general guidelines for the accounting and reporting of contingent liabilities. If the liability probability is 51% or higher, it will be reported as liability or provision. If the liability probability is 5 until 50%, it will be disclosed. If the liability probability is less than 5%, then no disclosure is required.
Okay, it's clear about contingent liability. If I'm not mistaken, there is contingent asset too, right?
That's right. The last topic in Psak 57 is contingent asset. Contingent asset is a possible asset that arises from past events and whose existence will be confirmed by the occurrence or non-occurrence of uncertain future events not wholly within the control of the company. Typical contingent assets are possible receipt of monies from gifts, donations, and bonuses, possible refunds from the government in tax disputes, pending court cases with a probable favorable outcome.
This illustration presents the general guidelines for the accounting and reporting of contingent assets. Contingent assets are reported as assets when the profitability is more than 90%. Contingent assets are disclosed when an inflow of economic benefits is considered more likely than not to occur, or greater than 50%. If the asset's probability is lower than 50%, then no disclosure is required.
Now I already understand about Psak 57. Thank you very much for the help, guys.
We also love to help you.
It's our pleasure. Don't be stressed anymore.
Bye!
Aww.
Based on regulation and letter, the company must pay compensation at a certain amount. So, on August, the company and the provincial government of Southeast Sulawesi signed Memoranda of Understanding, or MOU. Based on the MOU, the company would assist the province of Southeast Sulawesi by contributing certain amount of money to the corporate social responsibility program in Southeast Sulawesi. In 2010, 2009, and 2008, the company made the donation, which was charged to corporate social and environmental responsibility program. This activity is notes to the consolidated financial statements.